It's Monday, the 5th of January 2015. This is a chart for Regis Resources, one of the larger gold stocks on the ASX. It's had a pretty good run the last 2 months, or the last month even. It's up almost 50% in that period, and it's starting to look a little bit overbought, but there's still plenty of run, I think, in it after the downtrend that it's had. I've drawn this sort of couple of resistance lines here. The first one is this the middle of this double bottom, sort of the breakout zone, I guess, at about 195 to 198 there, and it's really testing that. It's actually this chart's a day old, and it's closed at $2 today on the 5th of January, so it's really right up against that resistance and looking like it might break out, but I'd like to see a little bit more strength before we can be certain that it's broken out. This down move here was obviously quite severe, huge volume these 2 days, so it might take a little bit of effort to get through that. So it could pause here for a while, but the company prospects are quite strong. If we look on a weekly chart, you can see just the severity of the downtrend that it's had from almost $6 about 2 years ago to bottomed at about $1.30. So this sort of long-term downtrend as well is also in this area. So that's another reason why it might pause a little bit at that resistance line. I've drawn this box here. Now, in general, there is a rule of thumb for a double bottom pattern. Once you break out above the peak between the double bottoms, that's the potential length of the move once you break out. So if we draw it in here, so if we break from the breakout zone, you're looking at sort of $2.50 move, $2.50 to be the extent of the move. Long term, I think this company is great. The management of this company have really, after the financial crisis, they were one of the best performing stocks on the ASX. I think it's gone from 10 cents to $6 in about three or 4 years. Of course, that was with a rising gold price, but management showed their ability to build mines and run them at very good operating costs. And they've had a few operational issues the last 2 years, but I think they're starting to turn those around. Some of them, like the flooding event, was a one-off sort of event. But I think they're putting all the right moves in place, and they might actually even be one of the sort of predatory companies in the market with a few cheap gold assets around. So they're one of my top picks in the gold space at the moment.